I still don't understand how the stock market works, and at this point I'm afraid to ask. So many of us who are watching this video must be going through this, right? So you don't want to feel the same. So because of that, we at FinWiz NIT Warangal have got you this set of videos or a course which we are going to upload in the next 6 to 7 days every day, which is going to cover everything a person needs to know to, and that will make a person financially literate, right? So some of the topics which we are going to cover in this next 6 to 7 days is what is a stock, NSE, BSE, a little bit about the history, some of the major events, why stock market is needed, what is dividend, what is inflation and how inflation eats everyone's money and we don't even realize. What is trading and how is it different from investing, what is Bitcoin, Forex, how to start trading, how to make an account, right? Many of us still don't know. And people who are interested in trading, for them, how to read chart, candlestick patterns, support, resistance, and what is an IPO, volume, and some of the basic things which we need to know before we invest in a company, like how to read basic balance sheet reading, some of the basic financial statement reading, the basic ratios to look into a company, what is mutual fund and how is it different from stock, and people who are interested in algo trading, for them, basics of algo trading, right? So disclaimer, we FinWiz NIT Warangal are not SEBI registered financial advisory. We are not SEBI registered, and the information which we are going to provide is just for the sake of education and should not be taken as financial advice or investment idea, right? And I would like to repeat this again, we are not SEBI registered financial advisory, right? Content. So today's video, we can cover these 4 topics. What is a stock? What is NSE and BSE? What is Nifty and Sensex? The history of Indian stock market, right? So what exactly is stock? So before I explain you what is a stock, stock is like stock and share and equity, they all mean the same. It's just a fancy way. They all mean the same. Some people use stock to refer it as share. Some people use it as equity. Everything is same. Stock market is same as share market. It's same as equity. It's just a fancy terms, right? They are all the same. So what is stock or share or equity, right? It's nothing but fractional ownership of a company. So let's just say this is a company and you buy share of this company, then you are buying a part of this company. Let's just say now if I go and buy shares of Asian Paints, then I buy a little bit of Asian Paints. So if Asian Paints does well, my stock price gains value. If Asian Paints does bad, then my stock loses its value. So it's nothing but buying a part of a company. So if company is doing well, it's making profits. So the share price, it's making profit. So obviously the ownership will become more expensive. So that's why the share price will go up. If the company is doing bad, then obviously the ownership will go down, and hence the stock will lose its value. So it all depends on how the company is doing, because you are an owner of that company. Now, if you guys didn't understand what I meant, I'll explain you a little bit. I'll try to simplify it in the next slide. So let me simplify. Reliance Industries has these many shares, right? These many shares issued. So Ambani, who is the promoter, owns these many shares, which is nothing but 49.14% of all the shares of Reliance. That's why he's the owner of Reliance. So if I go and buy 1 share of Reliance, I'll own 1 by this much, the total number of shares issued by Reliance, that many shares, right? And promoter, right? You will come across this term many times. Promoter is nothing but the owner of a company. So let's just say if I go and start a company and I own around 50-60% of the total shares of that company, then I'm the promoter of that company. It's nothing but a owner. Promoter is nothing but a fancy word of owner of a company, right? Now, where can you buy these stocks, right? How to buy stocks? Where you can purchase stocks. You can purchase stock or you can buy stock at NSE or BSE. NSE is nothing but the National Stock Exchange and BSE is nothing but the Bombay Stock Exchange. And prices are nearly the same. Like Reliance over here might be at 2,000 rupees and over here it'll be at 2,001 rupees or 1,999 rupees. It won't be like over here it's 2,000 rupees and over here it's 2,050. This won't happen. The prices are always nearly the same, right? Example, DMart and Reliance. DMart and Reliance, both you can, if you want to buy Apple, you can buy Apple at DMart or you can buy it at Reliance. So Apple in DMart will be 30 rupees per kg, but Apple in Reliance Mart can be 31 rupees per kg. It won't be like over here it's 30 rupees per kg and over here it's 60 rupees per kg. It does not happen. So it's the same, like prices are always nearly the same. Like HDFC Bank, right? HDFC Bank over here is in NSE is at 1,412.85 rupees, and over here at BSE it was at 1,412.90 rupees. So you can see how prices are nearly the same, right? Over here it can be 1411 also, like 1-2 rupees difference is fine. Now there are around 5,500 companies listed on BSE and around 1,600 companies listed on NSE. and BSE is the oldest stock exchange in Asia. NSE is relatively new. NSE was established in around 1990s only. Like BSE is very old, NSE is relatively very new.
Okay, so now we will learn about Nifty and Sensex. Now here we can see this guy is asking like, hey bro, how was the market today? And the opposite guy seems to be completely clueless because there are more than 5,000 companies listed in the stock market. So how we can tell whether the market was going up or down by looking through all of them? So to solve this kind of problem, we have Nifty and Sensex. What we do is, like, out of all the listed companies in the stock market, we take a small sample size and form Nifty and Sensex. Nifty basically consists of top 50 companies from NSE and Sensex consists of top 30 companies from BSE. If Nifty is doing well, we can say that market is also doing well and hence our problem is solved. We can take a look at some of the stocks that comes under Nifty 50 and Sensex, like Reliance, ONGC, Nestle. All this comes under Nifty. Reliance comes under Sensex as well, and some other stocks under Sensex are ITC, Axis Bank. But the major thing is that Nifty 50 consists of 50 stocks and Sensex consists of 30 stocks. Now moving on to the history of the stock market. Here we can see that how previously jobbers used to take the orders and execute them, but now the scenario is been changed and it has been completely digitalized. We can take a quick look at the history of the stock market. Like in 1875 BSE was established, in 1993 NSE was recognized as a stock exchange, and in year 2000 internet trading was started in NSE, and in the same year NSE also started derivative trading. In year 2001 BSE also started derivative trading. Now here Nobita is scared that if he will invest in some company, and what will happen if that company will steal all his money or do some kind of scam. So Doraemon comes to the rescue of Nobita and says that don't worry, we have SEBI for all such kind of things. And they both looks to be happy. Now what is SEBI? So that we will come to know in the next slide. SEBI is basically like the police of the stock market, and it is a body that protects the interest of the retail investors. After the major scam of the 1992, people were afraid to invest in the stock market. So to regain the trust of the people and uplift their morals, SEBI was established, and SEBI looks into the operations of the stock market and takes care that there are no malpractices going in the stock market. We can also say that SEBI is like the third umpire of a cricket match, and it looks over all the operations of the stock market and takes care that the stock market is running smoothly, like the third umpire does in a cricket match.
Okay guys, so now we'll look at the differences between online trading and offline trading. The offline trading used to take place during the Harshad Mehta times in the early 90s, and the online trading which we use now. The online trading was started in April 2000 in NSE. So the basic rule which you need to know about trading is like you need a broker for the execution of a trade. The investors go to the broker with their orders, and the broker in turn deals with NSE and BSE and place their orders in NSE BSE. The investors can't directly place their orders in the NSE and BSE. Like in the early 90s, during the offline trading days, there were jobbers who used to do the brokering job. Now the brokering job is being handled by some online companies like Zerodha, Angel Broking, Upstocks, etc., which allow us to do stock trading. Like you can see here, SpongeBob is very happy using the online trading. Like he did not keep the stocks in paper as he is irresponsible, and there is always a risk of losing stocks. So online trading has made his life very easy. But the other disadvantages of online trading is that you have no one to blame for a profit and loss. It's like if you tanked your account or you make billions, it's on your own. Can't blame anyone, as the broker is now a computer who handles your trade and not a real person. Now let's look at some of the major events that occurred in the stock market history. Like the most biggest scam was the Harshad Mehta scam, where he manipulated stock market of around 2000 to 4000 crore, and this was a very big event in the stock market history. Now let's look at the Sensex history, how the Sensex started and how it went up. The Sensex started at around 1979, and that the Harshal Mehta bull run happened, and the Harshal Mehta took Sensex to around 3,500 points. After the Harshal Mehta scam, the Sensex tanked, and a lot of people lost a lot of money. The next bull run in the Sensex came in the early 2000, which was a liquidity-driven rally, which was led by foreign investors who were looking to invest in India, and they took the Sensex to a 20,000 points limit. After that, in 2008, the Sensex tanked due to the global crisis, which happened in 2008, in which the housing market of US collapsed. Since then, the Sensex has been on a bull run, and in 2019, the Sensex reached the 39,000 point. So in early 2000 and early 2020, the coronavirus came, and so the Sensex tanked to 25,000 points due to coronavirus. As we know, the whole global market crashed due to coronavirus. But since May till December, the Sensex rallied again, and currently it is trading at 48,000 points. So you can see like what it doesn't had not achieved in so many years, it achieved in the just 6 months. So this was the history of Sensex. So like watching a tennis match is like you need to look left and right for the ball, as the ball goes left and right in the tennis match. In the stock market, the stock always goes ups and downs. So you need to check where the stock is on a bull run, where it's going up, or where it is on bear run, that it is going down. Thank you.